I've been underserved by the bank, but actually I'm going to defy the odds. I'm going to still find alternative ways to grow my business. And they've come to us. We've got them the funding products they need. And then the same banks that said no to them when they first started, now that they're doing 2, 3, 4, 5, 10 million in revenue, have come back to us, Lendoe as a platform, and said, how do we now work with these clients? And that's why we call them underestimated. And we have a number of examples like that. There are great founders out there. They're great at doing what they do, which is, running their business. But what they need is someone who can actually break down all of the options that are available to them, but also someone that can give them that confidence to actually apply once they've broken down those options. Because the fear of rejection, the fear of the unknown, the fear of not knowing what you're getting yourself into is often what prevents people from going ahead and saying, actually, I believe I can do this. I mean, in one case, we recently done a syndication facility for an entrepreneur of 1.6 million, and we raised that for them in the space of 7 months. But when I think about the success stories and I think about the case studies, it's a whole portfolio. We've actually grown with our portfolio.
The legendary Silicon Valley venture capitalist, Doug Leone of Sequoia, says he looks for spiky founders. Founders who have broken expectations, who stand out from their peers and strike their own path in one way or another. On this measure, founding a business when your parents are wealthy and well-connected and you went to an Ivy League school is not necessarily spiky. Doing the same when you had to first overcome poverty, or when you had to sell everything, borrow the shortfall, learn a new language and travel across the world to make it work, well, that might be. But the direction in which VC dollars move doesn't always reflect this. That situation is often described as being a problem of underrepresentation. But is that really the right word? At least to my ear, representation better describes what a government does or a government body. Underrepresentation being a problem fixed by demanding your right to self-governance. But venture capital is capitalism in one of its purest forms. A field where capital doesn't represent you, it takes a bet on you. So when 12% of the population gets only 1% of the investment, it is not because they're underrepresented, it's because they're underestimated. And that's a problem with an entirely different solution. Welcome to How to Lend Money to Strangers with Brendan LaGrange. Demi Ariyo, thank you so much for coming with me today to this episode of How to Lend Money to Strangers.
No problem.
It is a pleasure to be recording another one here in Amsterdam with Money 2020. Demi, I'm not much of a movie guy myself, but strangely enough, when I heard the origination story of Lendoe, the first thing that came to my mind was this old Hugh Grant movie, The Englishman who went up a hill and came down a mountain. That idea of kind of fate acting unfairly on a good community and then a band of plucky friends having to get together to put things right. So I might be over-romanticizing the founding of Lendoe here, but tell me the story about Demi Ariyo and his plucky friends who saved the church and how that planted the seed for what's become Lendoe.
No, most definitely. It's quite interesting, actually, because I'm not a movie guy myself, but I could see why someone would see our story as a movie, because it definitely ended with a happy ending. But, in all reality, there was a challenge that the church had, and a few friends and I were working in banking, and we felt actually there's something that we need to do about this. And that's why we came together. I mean, it wasn't just us that saved the church. I think it was a group effort. So there were other factors that influenced us being able to bring this money together and effectively ensuring that the church remained in operation. But we played a significant role, and we done it because we felt we had to. It was the right thing to do. And in doing that, there was a lot of research that went into it. And it was from those research facts, i.e. 50% of businesses in the UK at that time that were applying for funding for the first time from the high street bank were being rejected, and only 20% were going to find an alternative. It was seeing those facts that made me say, hold on a minute, this isn't just a church problem. This is a big problem. And that's how Lendoe started. And that's why I kind of was led to continue the journey and keep saving buildings and so on.
Yeah. And it's interesting because obviously that isn't a market where people are trying to give the money away as well. So it's clearly a problem in the system rather than a lack of supply or anything like that. So we'll obviously get into some of the details, but maybe we'll start at the high level. You went into the founding of Lendoe. You had done a little bit of entrepreneurship yourself. You had also done some investment banking and huge corporate projects. So you had experience of ownership from the very small to the very large, which I'm sure made for a good foundation. But what is Lendoe, and kind of what did you take from your early career in how you shaped and built that?
Yeah, great question. So Lendoe itself is an access to finance platform, particularly for underestimated entrepreneurs. And I think we'll probably go into what underestimated entrepreneur means a bit later, but to cut it very short, those that have thin credit files, either because they've been excluded from the main banking systems or actually they decided not to apply to those main banking systems. And effectively, the way Lendoe was built, I would say a lot of it came from inspiration that I took whilst I was working in investment banking, in the sense that we was doing quite large fundraisers with medium to large size corporates in emerging Africa, and these businesses could be turning over very easily 100 to 200 million. But because they didn't have the right governance structures, they found it very difficult to raise capital. And actually, I found that people in the diaspora in the UK also had that issue, right? Where they may have had smaller businesses, but they didn't have the right governance structure to kind of continue raising that finance that they needed. And I think that's probably the main thing I took away from my time in corporate and investment banking. And then my time in entrepreneurship, that just made me very audacious. And it gave me the belief that actually I can do something about this. And if anyone's going to do it, it should be someone like myself. So I think that's what I've taken from my past experiences and brought into Lendoe.
One of the things I love is that term underestimated entrepreneurs, because the fact that somebody isn't taking these bets does speak a lot to where their estimations of what they think this entrepreneur can achieve. And it does reframe the question in an interesting way. And yeah, a different solution then. And so maybe it's good to talk a bit more of the nuts and bolts. You're a platform that's linking up funders and borrowers in that space. But can you talk a little bit about what that looks like in product terms, in practical terms, and maybe also about some of those entrepreneurs? What sort of entrepreneurs, what sort of businesses are you seeing?
I think in regards to kind of the nuts and bolts and how it typically tends to work is we're working on the left side of the marketplace, which is the funding providers, with a whole range of funding providers that are not looking at your traditional data points. So sometimes these can be family offices that can be a bit more exotic about how they provide finance. So it could be venture debt providers that actually, because they're getting some sort of convertible equity in this instrument that they're giving to the entrepreneur, they can take on a little bit more risk. And sometimes it could be traditional alternative finance providers that are more willing to look at alternative data points than your typical banks would, right? And then on the right side of the marketplace, you're looking at entrepreneurs usually that have new age business models, definitely much more now than before. And I say that because COVID created this vacuum in the funding landscape, a particular type of entrepreneur. And that was the entrepreneur that either pivoted their model during COVID or started during COVID, because the banks decided in the UK in particular, actually, we're going to shut our doors. We're not going to give people bank accounts. We're not going to give people access to finance. I think it was about 3.5 million CBIL applications during COVID, and only 1.45 were accepted. So that's 57% of the businesses in the UK that applied that were rejected. And I mean, a lot of these entrepreneurs went on to say, well, I've been underserved by the bank, but actually I'm going to defy the odds. I'm going to still find alternative ways to grow my business. And as I achieve, and the banks start coming back to me, that's what turns me into an underestimated entrepreneur. And we've had tons of them. We've had clients that, unfortunately, the banks may have said no to them for a bank account. They've had to open a bank account with a very small bank, a very niche bank that don't offer lending. They've come to us. We've got them the funding products they need. And then the same banks that said no to them when they first started, now that they're doing 2, 3, 4, 5, 10 million in revenue, have come back to us, Lendoe as a platform, and said, how do we now work with these clients? And that's why we call them underestimated. And we have a number of examples like that. I mean, we have one client, they are in the e-commerce space. So as you can imagine, during COVID, e-commerce boomed, right? And, it was a great opportunity for whoever was in that space to really take advantage of that uplift in traction with everyone being at home. So they went from doing pretty much zero in their first year to doing 2 million in year 2. And last year just gone, they've done 10 million in revenue. Now that client is still struggling today to get a bank account with a main high street lender. So as you can imagine, that kind of quality client shouldn't be in that position. But because of the fact that they've gone through a vacuum or a season of COVID where there wasn't much access, they've had to suffer, but they've had to overcome, and they've managed to do that. And that's why we call them underestimated.
In the sort of entrepreneurship space, in the founding space, there is this survivor bias that is what makes the strongest entrepreneurs. Richard Branson will talk about how overcoming dyslexia is a key part of what he did and how he achieved what he did later on in life. And there are these hard situations that once people have come through, you can see who managed to get through. That tells you a lot about their grit and their ability to get by, but also it's taught them a lot in doing so. And I think that traditional finance providers don't really have a way to do that, which is why it's interesting to hear the sort of blend you're talking about of who's getting involved in the platform. Here, there is more of that appreciation of what it means to be an investor, people more willing to take risks. At the same time, those people, I imagine, would be really hard to find if you are just a founder, and a founder without the community that would exist if you came through a traditional Ivy League school and you had an accelerator or something who could point you to all these things. If you're just somebody who started a business in the back room during COVID, you wouldn't even know that these sort of things. I mean, I didn't know what a family office was until my friend was running one. It was, it's a lot of gaps in the financial world that can make people unaware and wary of approaching systems that exist.
It's really interesting you say that, actually, because that's one of the main problems we solve, which is the fear of rejection and financial literacy, right? And what you often find is that there are great founders out there. They're great at doing what they do, which is running their business, but they're not CFOs. They're not financial experts. And what they need is someone who can actually break down all of the options that are available to them, but also someone that can give them that confidence to actually apply once they've broken down those options. Because the fear of rejection, the fear of the unknown, the fear of not knowing what you're getting yourself into is often what prevents people from going ahead and saying, actually, I believe I can do this. I believe I can access this finance.
Yeah, and it's just some of the benefits, some of the privileges that come up from growing up within sort of wealthy environments, or relatively wealthy environments even, is that awareness of how business works, but also the appreciation for debt in different roles, where if we're talking about credit awareness, the vast majority of the messaging will be very careful about taking out debt.
Most definitely.
And that's probably the safest default for most people. But actually, when it comes to business, there is a very real and very beneficial role to taking on debt or giving away equity. But in many cases, debt is the best option to start a business. And we've had a very bad history in the UK with payday lending.
Yeah.
And you can imagine coming out of one of the communities that were targeted by payday lenders.
Exactly.
Your parents might have really suffered, or people certainly would have suffered. And to then say, well, I want to take out a business loan. The most important thing in your life is like, I'm growing this business. No, I don't want to risk it.
I agree with you totally. I mean, I think, it's a really interesting point that you make, actually, because one of the things that we're constantly doing is having to explain to founders that consumer lending and business lending is very different. In the UK, when you're taking on a consumer loan, it's going against your personal credit profile. When you're taking on a business loan, if your business has the capacity to take on that loan, it's going against your business's profile, which is actually a separate entity to you. And actually, when you think about it, a lot of these businesses that are being started by these underestimated entrepreneurs that are in these kind of new industries like last mile delivery, e-commerce, things that may not be able to attain equity investors immediately, the only way to scale was actually to raise either family and friend money, which is a form of equity, or debt. And if you're too concerned about taking debt or taking credit to scale that business, how are you ever going to get that business to where it needs to be?
I mean, when you think about like genuine wealth creation, I mean, not every one of these businesses is looking to be or can be a unicorn. But if we think about the modern route to generational wealth, it's through owning the business you create. And the only way you can really do that is taking on debt, because if you're giving away equity as the alternative, it's more controllable at the start. But if you do turn your 0 into 2 million, into 10 million, into 20 million, into 200 million in a few years' time, you've given away so much of your business early on.
Business, right? Yeah, it's I think it's a dichotomy that a lot of founders find themselves in. I've got this great business. In order to take it to the next level, I need to raise some sort of financing. I don't know what options I have available. I don't understand venture debt. I don't understand revenue-based finance. I don't understand even what a term loan is, but I do understand that I need money. So equity seems sometimes like the best bet because it's someone giving me money supposedly for free. But actually, when you look at things like the IRR that a lot of these venture capitalists or a lot of these angel investors are looking for on that capital they're giving you, and then you look at the IRR based on the loans that are available to you, you begin to realize quite quickly, actually, if I was a bit more savvy, taking this lending and having more ownership of my business, more rights with what I'm going to do with this money, makes a lot more sense considering how far I've taken my business already. I'm not saying equity is bad. Equity's got its part to play, but I think like in that case study that we spoke about, when you've taken a business to 10 million and you own almost 90 to 95% of it and family and friends on the rest, you want to try and retain as much more of it as you can rather than giving away a large slice to an equity investor.
Yeah, and you say Lendoe is a platform, and I think one of the key things in platforms, and to slightly echo what I spoke about with Craig yesterday, they also create all the other benefits that come with that. So if you've got different businesses with similar owners who've had similar stories, and you've got investors who have bought in particularly for that, maybe of family offices that have been funded by successful immigrants, by successful
Most
people
definitely.
from these communities, you're already creating that sort of world that does exist currently in Silicon Valley, but seems very alien if you're coming from one of the non-traditional investment worlds.
And I think that's the power, right? That's the power of kind of building communities on platforms or building platforms. It creates these communities that naturally start working in tandem with one another without the platforms, without any kind of work from the platform. Just because you've got a network, you can kind of introduce one customer to another, and before you know it, they're doing business together, or one investor to another, and before you know it, they've done another 3-4 investments to friends of that first person they invested in. And that's really what you want to create, right? And I guess it kind of goes back all the way to the church, which is in communities that understand one another, transactions can be made quite easily. And I think that's what happened with the church. The transaction and the commitment to make that transaction happen quite quickly, because we understood the church. We understood what was going on. We understood why, after a while, why the banks weren't lending, and we understood how we can protect ourselves if we were to lend. And, a transaction happened. And just like with the church, I'm sure there's so many other businesses that through the Lendoe platform have continued to thrive and have been saved to some degree. So, yeah.
Yeah, well, let's talk about how they're doing it, some of the sort of processes in the lending. I see at Lendoe.com, you talk about looking beyond just the traditional credit score, but what does that look like? How are businesses evaluated, and who does the screening? How do the funders see and choose whether or not they're going to make a loan?
It's a bit of both that happens, and that's because when we initially started Lendoe, we was a balance sheet lender, so we actually have underwriting experience. But when we came to COVID and we realized that actually trying to continue providing balance sheet lending alongside the government facilities that were available, the better thing to do was to refer customers coming to us to the best options. We realized that we had to take a step back and come off balance sheet. And in doing so, we built what was more of a platform, more of a brokerage product. And since then, we still take that part of the AML KYC, but that second part of the credit analysis, we do a very touch-like 5 C's of credit model, where we'll try to understand that person's story, understand their capacity, their capital, the condition we're in, i.e. is it COVID, their character, and also, other things like, do they have the collateral? And then we would refer that information to our funding providers, and then they will conduct further analysis, and then they will provide a yes or a no or an indication as to whether or not they're going to provide the financing. So that's really how it works. But I guess what we're doing that's quite different is we're looking at some alternative data points, right? Your typical bank would want 3 years worth of annual accounts, profitable year on year. We understand that actually post-COVID, some of these businesses have taken advantage of COVID. They've gone to do 1, 2, 3, 4, 5 million. And actually just looking at their bank statements, you can kind of get an idea of where they're going with this business. And you can kind of get an idea of how can I put this best? I wouldn't say how repeatable their sales process is, but you can see if they've done this 6 months in a row, month on month, what's stopping them from doing it 12 months in a row? What's stopping them from doing it 24 months in a row? And taking that kind of revenue-based finance data and providing that to funding providers, be it family offices, be it alternative finance providers, is often what they'd want to see to say, actually, I'm willing to overlook the fact they haven't filed their first set of accounts, and I'm willing to look at what has happened in the shorter or the medium term to this business.
Yeah, and I think that's, the heart of it, right? We're bringing the right sort of funders in that are also not just looking for a big, steady old business that has got 3 years of the same performance, but somebody who's on that up ramp. I guess one of the problems or challenges in serving these sort of underestimated entrepreneurs is that when you set up Lendoe, you put yourself in that same bucket, right? Your business is all about people that, by definition, investors and backers are nervous of. So what was your experience like actually getting the business off the ground when you're saying, look, I'm going to lend to these people, or I'm going to facilitate lending to these people that you're already not all that confident in?
I think initially it was quite hard to begin with, as anything, right? So the first few years I was still working at a fintech. I was kind of working on Lendoe in the evenings. But what I had was, kind of case studies to prove that actually this works. And I think, because of that, family and friends or people that were close to those communities were willing to give us on lending or capital to on lend. But when COVID happened and actually the unfortunate death of George Floyd took place, people really started to wake up to the access to finance problem within a lot of the markets that we were serving. Not just because we had a significant proportion of our portfolio that were from Black and ethnic minority backgrounds, but also because people actually took a step back and looked and said, hold on a minute, is access to finance fair? are other markets receiving access to finance? And since COVID and since the death of George Floyd, not only have we received backing from corporates, but we've also received a lot more backing from investors. I mean, we have gone off balance sheet, which probably has a part to play as well because it's less risk, but we've definitely received a lot more sponsorship from the wider investment community. And I guess that's because they caught onto the problem a bit later than we did.
Yeah, and I suppose in some ways, it doesn't sound very good to say this when I'm not meaning it as badly as it comes out, but it's in some ways outsourcing that understanding of the communities that they didn't come from. I should have had the numbers here because I looked at them before we spoke, but I think I'm going low when I say it's like 95% of venture capital money is managed by white men. The percentages are different when you look at the number of employees and things, but when you look at actual dollars controlled. And not every white man came from the privileged traditional route, but I mean, it's very hard for you to then, even with good intentions, understand how to invest and how to pick and how to understand which businesses resonate with their communities. But here's somebody who, one, understands what I'm trying to do. They understand the investment game and they understand all the things that I need in place, but also they're bringing together these communities that are finding the businesses that they want and support. It is a big benefit to that side of the industry too, to have the best of both worlds. So I can see it really fitting in that ecosystem, but at the same time, hopefully also just a growing appreciation that the communities that have for a while been served by brands have been willing to sell to the communities, but saying, well, are you actually willing to put your money where your mouth is and also invest in them?
Most definitely. No, most definitely. I totally agree.
And obviously, you talked about use cases, and I guess human stories are really where it comes from. Are there any other case studies that you put front and center when you want to talk about the good that Lendoe can do to founders?
To business, there's too many. I mean, let's put it this way, right? We started lending off on balance sheet in 2018, and I would say the majority of the businesses we were serving at that time were probably generating anything between £250,000 to £400,000 at max. Today, we're not lending from our balance sheet anymore, so we're off balance sheet, so we can do much bigger tickets. But just to give you an indication of the size of the businesses we're working with now, they're typically doing between 2 to 10 million in revenue annually. So I don't know what kind of I don't know if that's 10x, 20x, but that has not only happened with the revenue that they're generating, but that's also happened with employees. I mean, many of these businesses that may have taken £15,000 from us when we was balance sheet lending, we're now doing kind of fundraisers of 150, 200. I mean, in one case, when we recently done a syndication facility for an entrepreneur of 1.6 million, and we raised that for them in the space of 7 months. And they're going on to employ close now to 60 odd people. Yeah. From these same communities that they're from. So when I think about the success stories and I think about the case studies, it's our whole portfolio. Yeah. We've actually grown with our portfolio. And I think if we remained kind of lending from our balance sheet, I don't think we would have been able to continue doing our business because they were growing so fast. And they still continue to grow. And, some of them I'm guessing we're going to go on and hopefully become unicorns in one day. And yeah, like you said, become funders. Say, how do I put money back into this platform to help someone that was like me 3-4 years ago? So yeah, I mean, case study wise, I can probably send you a whole list.
Well, yeah, I know there's some on the Lendoe.com website. So if people wanted to go and see those case studies for themselves, see some of the work that you're doing there and follow the stories, maybe get involved, where's a good place to keep up to date with what Lendoe's doing?
Definitely our LinkedIn, our Instagram, and also we're not on Twitter as much as we should be, but hopefully that would change. So I'll say our Twitter as well. And then of course the website, www.lendoe.com. We do have a YouTube page as well where we've got a few case studies, and hopefully we'll be refreshing that page with a few new case studies. So you can see the people that have gone from 100,000 to a couple million.
Perfect. And a big update behind the bike shed next week as far as the show comes up, but I'll put that all in the show notes. Demi, thank you so much. It's been a pleasure chatting to you.
No problem at all. Thanks so much, Brendan.
And thank you all for listening. Please do look for and follow the show on your favorite podcast platform and share the updates widely on LinkedIn. Plus, send me a connection request while you're there. This show is written and recorded by myself, Brendan Lagrange, in Brighton, England. Show music is by I Am Wake, and you can find show notes and written transcripts at www.howtolendmoneytostrangers.show or just www.htlmts.show. And I'll see you again next Thursday.